Well, everyone, here I am with my friend Wilson Mack. We're going to call it the Fall Fireside Chat. And we're going to talk about something really important that's going on right now in fall of 2022. We're talking mortgage rates. That's a big piece on a lot of people's minds. We're going to talk about and buyers and what it means right now for a buyer, whether they're looking to sell and buy, or maybe they're a first-time home buyer. And perhaps this scenario is better fit for that first-time buyer. But really the idea is we want to take those headlines, that information about the interest rates, and take it from terrifying to clarifying. So that is what we hope to achieve. And Wilson, you have, I guess I should go this way. Wilson, you have a really awesome tool that's going to break this information down for folks who are curious what it's going to look like for them to buy a house right now rather than rent. So why don't you let us in on what you have to show us here?
Yeah, so my whole thing is what I like to tell clients and everyone that it's all about education, and without all the data you can't make a educated financial decision. So what I want to share with you and the audience out there is a total cost and wealth analysis, and this specific one is for someone that could be a current renter and you're perhaps looking at being a first-time home buyer, and how do the numbers look? And we'll look at a couple different options, and then we'll also analyze what does it look short-term and long-term. Here is the total cost and wealth analysis. And again, this is a rent versus own. And what I put together here is on column one here, this is kind of what I feel that is a common rent, 1995. Jennifer, you think that's pretty correct?
Yeah, I would say, in Portland right now, and the most recent statistic I read was mortgage or not mortgage, rents in Portland for the average one bedroom apartment is around $1,500. So, I mean, maybe if you're renting a larger apartment or a small house or something, that seems like it could be a good average to start with.
But the main point I want to show here is that when you're renting, 100% of that goes to nothing basically, right? So there's no actual benefit. So if we look at this box here where it says net monthly payment, it still remains at 1995. So if we go over and look at option one here in column two, and let's just say that, there's some starter houses out there for 300, right? You think?
Yeah, I think so. Yeah. Especially if you're looking at, a townhome or a condo, something like that, that's a good entry level property. There are properties out there in that 300 range, I would say.
Yeah, and we're going to use a conventional 30-year fixed loan, and the typical minimum down is 5%. So that'd be $15,000. And then you subtract that from 300, the purchase price, then that means a loan amount of 285. Rates now, I mean, they're basically at the all-time highs now. We are officially in the sixes. But the the total payment is actually consists of four different things: the principal, interest, taxes, and insurance, and that's 2188. And we're talking about, well, if you're investing in something versus paying rent, two of the big benefits are, the first one is a tax benefit that you receive, and then the second one, like I mentioned, is that when you make that payment, it's those four different things, right? Principal, interest, taxes, and insurance. The principal, that actually does not go to the lender. So that's why when someone makes a mortgage payment, the balance reduces each month. So that goes to them. It does not go to the lender. And when you take those two benefits into effect, the net monthly payment is 1592, and that is actually $402 less than paying for rent. And
Wow.
one thing that's really, really, really everyone should make note of is that because this is a 30-year fixed mortgage, that the principal and interest never change throughout the life of the loan. But
Right.
when you're renting, what do you think happens, Jennifer?
When you're renting, you are subject to rent increases like those folks here in the state of Oregon could be seeing. That headline that came out talking about the 14.6% possible rent increases, knowing, of course, that not all landlords are going to enact that percentage increase, but it is a reality for a lot of folks who are renting in Oregon that, it your rent could increase at any, during coming years.
Yeah, absolutely. So by investing in yourself and investing in real estate, this is a great way to protect themselves against any rental increases because then you're locked in at that 30-year fixed mortgage. So this example
Right.
was at the 300K purchase price, but then column 3, we just wanted to show what does 350 look at as far as payment, and then after all the benefits, then that's 1857. So that's still $137 less than what the current rent payment is.
Right. And I think that's one of those things too, is that, when I have conversations with buyers, some of the important things that I like to talk about is, and it's usually a question, and if you're a buyer, is honestly, do you get any tax benefit from paying rent? The
Not,
answer is no.
not
You
at
don't get a tax benefit from that. Do you gain any of the equity that is accumulated over the course of time that you're renting that property? The answer is no. But when you own a property, as you're showing here, that interest that you pay, there's a tax benefit to you. That's less tax money you're going to pay to the government at the end of the year based on the fact that you're paying that rental expense in your mortgage every single month. So there's a tax benefit. You get to keep the equity that comes as a result of owning that property. And over the course of time, what's going to happen?
that everything is going to go up in value. Things are going to appreciate. And that's actually what these two graphs here are on the right. And because we also want to analyze things from a short term perspective and a longer term perspective. And here's a good illustration of so this one rent versus principal paid in 60 months or 5 years. And this takes in consideration that if that current rent at 1995, if each year it increases by 3%, what's it going to look like in 60 months? That means the renter will be giving their landlord over, I mean, look at this number,
Amazing.
$127,000.
Yeah. And as a renter, you don't get that back. That is gone. That is flown. That
Yep.
landlord's receiving that benefit from the rent you're paying every month.
Absolutely. They can, guess what they can do with that? Anything they want. They can invest
Right.
in additional properties, they can go on vacation, but the point of it is that it's sponsored by the renter.
Right.
And then the next column over, and remember when we talked about the benefit of the principal paid, if you add up all those payments or the principal portion of that in 60 months, the the investor or the homeowner is going to keep nearly $19,000 in their pocket. That's based off of 300.
Wow.
And then you go over to the third column based on 350, it's a little bit over $22,000. So that is a drastic difference
Hmm.
in the investor's favor.
Wow. That's amazing.
And then if you're talking about building long-term net worth, leaving a legacy, building generational wealth, and again, we're going to use very conservative numbers, just like with the rent increases, 3%, and then the number that you mentioned was double digits. We're just going to use a 5% appreciation rate. So that $300,000 home in 30 years, because of the appreciation, each year it goes up in value, is going to be worth almost $1.3 million. The
Wow.
$350,000 home is going to be worth over $1.5 million.
That's amazing. And for those who are unaware, that 5% is based on the 50-year average of what appreciation has been annually in the real estate world. So that's where that 5% figure is coming from.
Absolutely. I mean, last year we had a 20% return, but if you look at the average, then that's why we want to look at
Absolutely. Absolutely.
the 20% is not sustainable. So we really want to look at real numbers and not just have some type of guess that overestimates everything, because we want everyone to know the data behind everything.
Right. Right. Well,
So
this is,
yeah, that was
yeah,
what I wanted to share.
that that's amazing information. And I think for anybody out there who's on the fence and wondering if buying is the right move right now, I think hopefully this is going to give them kind of a kick in the pants to make that decision. And if it's something that they can aspire to, because not everybody can just pick up and move and buy a house tomorrow. Some people need to save up the assets, need to save up cash and make a plan, and that's okay too. It's timing when it's right. I hesitate to say time it, because the important thing is to not try to time the market for when things are going to be the best deal, because that's almost impossible to do. um, it's really about time on the market, time in the market, buying something and benefiting from that over the course of time and not taking a short-term look. But make a plan. I think that's the important thing. If you're renting right now and you need to save up some money and get some things going, start making that plan. Talk to the right professionals. Talk to folks like Wilson, who are going to be able to look at your unique financial situation and help you formulate that plan and say, okay, you've got to improve your credit. Why don't you pay off these debts? Why don't you go through some of these steps that's going to put you in the best possible position in 6, 8 months, 9 months, a year, 2 years down the road, when you're going to be prepared to really make that move. So I think that's where my head goes.
Yeah, I think you're 100% spot on, because a lot of times, I always say that the excitement is in the home. So the financing is looked at secondary, but the financing is critical in getting the home. So, like you mentioned, if we can lay out a plan, yeah, maybe right now might not be the right time, but if we look at the entire credit profile and figure out, yeah, if XYZ needs to be paid off, or can we put a budget in place to save money for a down payment? There might be programs where they might not need a down payment or need very, very minimal down payments. We can always explore those products at that time. So, and
Yeah.
anything, just like, you're an absolute real estate expert, and if anyone has any questions, they should reach out to you.
Of course. And to you as well. Mortgage side, Wilson's great. This has been awesome. Hopefully anyone watching has gotten benefit from this and is able to take this, whether they live in Oregon or live anywhere in the country. I think this information is good. Talk to your local folks that you know, like, and trust, and get that process going. And the benefits for you long term are definitely there. This is awesome. Thanks so much, Wilson.
Yeah, anytime. And the total cost and wealth analysis, if someone wants one that's customized with their numbers, don't hesitate to reach out.
Fantastic. We'll see y'all next time.
All right, see ya. Hey, we're supposed to high five, right? How do we do this?
Oh,
We're
oh,
trying to do
like,
this on. We got switched.
ah, ah,
Yeah.
hold on. Oh,
The other side.
failing. I'm failing.
There. We'll,
Ah!
we'll figure this out. We'll figure this out on the next Zoom. See you guys.
Next
See you
one.
guys.